everyone, welcome to yet another episode of Reinventing Finance with my co-host Tom, and my name is Nick. Today we have a great guest, Roman from Ottonova. But Roman, before, I think, rather than me trying to introduce yourself, why don't you just briefly introduce yourself to our audience? Who are you and what do you do?
Hi, it's great to be here, Tom and Nick. I'm Roman. I'm a physician by training. Worked at McKinsey and did a healthcare startup serving patients of private health insurances in Germany, and that was later acquired by a private health insurance. I went on with consulting, started my own consultancy, and looked for the next big thing. And I was kind of provoked at the time when my startup was bought by one large private health insurance by the lack of speed and agility in the private health insurance space in Germany, which is kind of like a cozy cartel. And when the time was ripe to start our own health insurance, I grabbed the opportunity, sold off my consultancy, and started Ottonova as a digital health insurance, basically digitizing everything from the sale, the acquisition of the insured lives to the whole operations, and also to the kind of disease management services. And what we did manage this way, as the same way as Apple, who has the software and the hardware. We have the services, and we are the health insurance. In contrast to my first startup, where we were just the services part, we could actually get a great customer satisfaction and have an NPS of 67 these days, and far above, more than double the NPS of the next follower in Germany.
That was preempting my question. Was a while until but twice the one of the next one. I think everyone can kind of appreciate how big of a gap that would be. Maybe more broadly, what's currently on your mind? What's exciting? What's frustrating? There have been some news around you and your company recently, but what's on your mind?
Let's put it that way. What's frustrating is the lack of speed in insurance. Insurance is just by definition something that you choose for your whole life. We have a customer lifetime value that's just incredible. People choose us once and then they stay forever. A tariff, you started once and then it keeps running for 30, 50 years. So things don't move that quickly, and I like to think fast and act fast and move fast, so that's sometimes a bit frustrating. On the other hand, it's good because sometimes with my first startup in my life, I was a bit too early. Now this time maybe I was also too early, but it took so long that we are now just in the right time for Ottonova here. What's exciting is actually to make a real change, as health insurance is the paying layer in healthcare. If you do a different health insurance, you can actually change healthcare in the long run. That goes back obviously to my first frustration that it takes a long time, that long run, but nevertheless, you can really do that. And so it's for me, it's fascinating to work together with a great array of great people. Because we have so many different people, like from the techies to the actuaries, who are actually quite cool, intellectually stimulating people, and to the operations, and to the salespeople. So it's fascinating the multitude of people that work together in a health insurance, in a digital health insurance, especially. Where of our staff, more than 40% are actually IT and product people, and the product, I mean the IT product, not the product management that you have in insurance. So that's what's really kicking me, working with great people and creating that customer experience that I always missed in health insurance and that I enjoyed, being an Apple fan, that's why all my comparisons usually are Apple comparisons. So getting that same customer feeling into health insurance, which like almost seemed like impossible, that's what's really kicking.
Now this prompted on my end 4 follow-on questions. You've mentioned CLV. Can you share how large it doesn't have to be yours, but the range of a private health insurance client, what the CLV is, or how that would be calculated, just roughly, would be just interesting.
Yeah. So basically, if you look at the full health insurance, people are really, signing up with, average age of 32, and then you have a life expectancy of, let's say, 82. So that means that they're actually staying for 50 years. And you have, obviously, some insured lives will leave you over time, but it's not that many, so you can actually calculate that. Then you have, your monthly, your yearly revenue on that, and then you can discount it. And there's a factor that actually goes against the discount factor, that actually, as we all know, your health insurance premium will increase over time, right? Because we calculate it in a way that it should be stable over time, but we do not include inflation. Obviously we do have inflation, and now these days we really do start getting inflation again. But we also don't include medical inflation. And medical inflation has always been bigger than normal inflation. Medical inflation being, the next great invention that makes us all live until we are 105, which is a great thing, but it costs money, and our insured lives will stay for longer, and they will have to pay more premium, not only because they stay longer, but also because they will get those costly treatments.
Yeah.
So where you usually have to discount your future cash flows quite aggressively, we have a countering factor, where we are discounting future cash flows who are actually increasing over time. That's why in the full health insurance, it's fun. But even in supplementary health insurance in Germany, and we know that from other market participants, obviously because we haven't been in the market for so long, but you have a customer life of more than 20 years. People, if they once started. So basically, and that actually leads to the challenge that we have. You buy your customer upfront, basically. You have marketing expense, you pay your partners or whatever, and then you profit from the customer for a very long time. And that's why it's a cash-intensive business to start. That's why also, because the customers know they will stay for so long, you have to build the brand, which is again cash-intensive. And that's why at the beginning, it's a very hard game, but if you're in it, it's good. So the first few years were really tough for us because we didn't have the brand, didn't have the experience, didn't have the right connections yet. But now that we have that all in place, it's obviously getting much easier. And the regulator in Germany doesn't let new health insurance in every few years because, on the other hand, they don't let anybody go broke. So in a market where nobody leaves the market, you cannot have somebody enter every year. So basically, roughly, rule of thumb is like every 20 years they let a new health insurance enter. And so, if you have survived the first few years, you're actually in a quite good position.
Yeah, every 20 years. I mean, this sounds like just, innovation heaven, so much pressure of new supply coming in every 20 years. I guess towards what you've mentioned. So if people stay for a very long time, right, you need to kind of get them early. So what, from your point of view, and obviously, whilst you're welcome to share any proprietary tactics, secrets, and silver bullets, but so how do you get your clients, and potentially what have you learned along the way? Because that seems to be one of the key challenges, and people are aware that, trying to get your 32-year-olds onto your platform. So what have you learned along the way? Where are you focusing your efforts around this these days?
Yeah, I think we did a couple of things very well, and we learned a couple of things where we made some initial mistakes. So what we did very well is we really knew our customer well. We had done lots of interviews. We knew different kind of personas who were the typical customers who we wanted to attract. So we had, we even had like pictures of them and description of them in our office before we sold the first insurance. And interestingly enough, those were pretty much the customers that we got in the end. So that we did right. What we also did right is we made our customers our fan base. So our customers not only love us, but they recommend us. And now, obviously, at the beginning, that doesn't help much because you don't have many customers. So even if they recommend, each recommends 2 people, it's not generating gigantic business, but it does help. What we didn't do at the beginning, we had this startup mentality. If you build it, they will come. It's like my only excuse is so we didn't have commissions. We didn't make sure that we are winning the tests in Germany. Stiftung-Warentest, very important, and we didn't pay commissions, so we were not on the comparison portals. And my only excuse is that Lemonade did the same thing when they launched in Germany, and they weren't very successful because of it. And we saw that quickly, and we pivoted and we changed, and we did tariffs with commission. We worked together with comparison portals now these days, even in a very close partnership, doing new kind of things. And we also learned that our customers wanted to see us in the test magazine. They wanted to see us win the comparison at Check24 at the comparison portal, and so we changed that, and then our business took off as well. And the next thing, obviously, we also saw at the beginning that we lost many customers who loved us, who loved the product, but at the end said, "But you're new, you're a startup," and I always heard that startups go broke, and I'd rather go to one of the old guys. And so obviously you can explain to these guys, that our regulator BaFin will never let us go broke, but still there's the emotion. And so basically we had to build our brand, and that's why we do television commercials and are building our brand in many different ways, and have lots of seals on our website, and a lot of quality approvals, and that has been more important than we initially thought. So it's been a learning experience, and these days we work together with a multitude of partners in order to saturate the market, to penetrate the market, to get to many more pockets of customers than we can just get to with our direct marketing. So we still do direct marketing, but we also work with partners.
Sorry, Tom, go ahead.
Can you tell something about, let's say, what works best?
It's different in different tariffs, really. So if I oversimplify it a little bit, and the full health insurance in Germany, direct still is the strongest channel for us. So that really works. Okay. What we need and what we do have in direct, the customer journey is pretty digital, but at some point you can actually talk to experts with us in our call center, and that talking to the experts is very important in the full health insurance. Now, if you look at the supplemental health insurance, the story is different. In supplemental health insurance, we sell the majority of our insurances through our partners. And we still have a healthy part of the direct, and also direct goes up whenever we increase with the partners. So you do see that they influence each other. And there's usually very little or none telephone support necessary, so it's so these are really almost two worlds,
Yeah.
And I think, and if you're looking back. So, I think you've started Ottonova 6 years ago. You got the license around 4 years ago. You've already kindly elaborated a little bit on the learnings on how to acquire customers. Is there anything else that you learned along the way that you would kind of whisper into your own ear 4 to 6 years ago that you wish you'd knew or wish you'd believe?
Yeah. I think most of those things are actually truisms that you've heard and you've preached yourself, but you didn't adhere to them all the time. So it's like this, get the best people you can get at any point in time. If you have a question mark, with a specific person, if you're not sure, rather finish it earlier rather than later. But it's not very specific to Ottonova. I think it's specific to all new businesses. And what I did learn over time, we are much more structured than we were at the beginning. At the beginning, we enjoyed this the startup hype of I did like 55 decisions a day, with 35 seconds thinking before each decision. And some of them were right, some of them were wrong. And these days, we really prepare the decisions. We have so many competing projects, so many competing partners that we really have prioritization meetings where you have to come prepared, where you have to fight for your topic. And so we're becoming much more corporate over time, although the idea obviously is not to become like a big corporation, but rather like a big Amazon, to stay somehow in the startup mind. But even Amazon, I mean, some of you are actually imitating some of the Amazon tools. So the narratives and that kind of stuff. It forces you to make more deliberate decisions and especially in a world where the decision that I do today actually will impact what we will do over the next 18 months, in some cases. It's a good thing. So that's what I have learned, not shooting from the hip, but actually preparing decisions. And it sounds counterintuitive for a startup, but I think it's important for an insurtech because we are in this long-term business. So if a new partner comes with a great idea today, we really are checking it first, trying to see how it could work. And it has to fight against the other partner ideas in the pipeline. That's actually the most kind of conflicts that we also have are actually resource conflicts, because there's always more good ideas than resources.
And this is really interesting because you mentioned it initially, some of the insurance industry seems like moving at glacier speed. And I remember sometimes where people, it's like, yeah, we don't need more opportunity. We're good. I remember being in this one meeting and they were like, Hezio, this is really interesting, but we're good. It's like, you could have told me that before I flew to Munich. It's fine. I don't judge you. But tell me before I get on the plane, because you knew what I was trying to get out of this meeting. So it's good to hear that there's others seeing, this amazing opportunity. I think that's really what's exciting, right? And getting increasingly better tools and resources to have a crack at making this a little bit better. And maybe.
So what we do differently than your experience, we basically welcome new ideas, and they actually can make it, but we will kill an old idea for it. That's what we do.
And so I think maybe moving into, let's say, the broader health tech space. With your experience, as you said, kind of as a consultant, as a health service provider, as now an insurance, so payer of these services. Do you have like a short list of kind of things where you say, this is hype, but this is really good, of health tech services which you feel guys, this is really cool, and this is something that we are already have integrated and are willing to pay for, or are looking to partner, because you must have seen a lot of them. Already.
I have to make a couple of introductory remarks there. Our insured population is young and healthy. Okay, so whoever, whenever I see a great diabetes app, I don't really care. At least not for our own population at this point in time. So we have looked at migraine services or whatever, so we're looking at things only that are interesting for our own population. We have a program called HealthX, where we are actually paying also like for your Apple Watch or whatever, stuff like that, meditation. And basically the way that we can afford to pay for it is that basically we use this as a market research source to be close to our insured population. So basically we pay you for market research, but we don't pay you for with cash, but we only pay you, in kind with something that's good for your health. So that's where we are testing our way into the future. Our long-term strategy is, as we are the paying layer in health insurances, to help also with the introduction of these new services, basically to be the backbone for that. But it's not enough only to be little Ottonova for that, so we have a joint venture with a software provider where we're actually providing our app also to other insurers. And we have started some white label corporations now where other, brokers or digital brokers or health or insurers who don't have a health insurance can actually sell our insurance under their name. So my idea is, I want to have my app in every household, and then you can have an interesting game. But it's step two, so we're not going to be the spider in the web of health tech for the next 2 years. But we can be, and that's why it's basically a three-step strategy where now we provide our app directly via partners, via white label or software as a service. And then when we have a large installed base, we can add some services on top. And in the meantime, we test all these services with our own health insurance, with our HealthX program, and also with basically just paying for these services for our insured population when they need them. And getting a larger base for us is also important because we have to wait many years until we have a large enough diabetes population in Ottonova. And so it's much easier to basically provide the app for one of the old insurers, and then you have right away lots of diabetes patients.
I wanted to ask a question on let's say the infrastructure you built. Because what you often see is that, let's say, startups who started as a B2C proposition, they moved then from B2C to B2B. And I could imagine that, let's say, especially as you know, the field of the old corporate health insurers in Germany pretty well, that let's say they find out that you're really built something or a machine which works pretty well. Which is working much better than the old infrastructure they have, and are there any ideas of let's say splitting the company in two, and then just providing the infrastructure for all this old, slow, not integrated, digitized health insurance?
What we've done, we've created a joint venture with a company called GlobalSight in Germany, who is market leader in checking whether the physicians are putting the right codes on the bill. And so they're basically providing services to almost all of the private health insurers in Germany. And we've started a joint venture together with them. And with that joint venture, we're servicing other health insurers who want to be using part of our app, for instance. And so we do that already. So that's something, what our idea was, we don't want to be defocused. So we are focusing on providing excellent customer service at Ottonova. and developing the best tech available. And then, in a secondary move, we monetize that, but with a partner who has as his, as his customer, not the end customer, but the other insurers. We couldn't do both at the same time, or at least we don't trust ourselves to do both at the same time. So that's why we are working with this joint venture logic.
Okay, but it's only a very small part of what you.
Yeah, that's not the biggest part. It's not, and we're not focusing on it. But over time, software as a service obviously has very good margins.
Yeah,
over time, that can be a relevant part of our value. It takes more time as well, because what is an advantage in Ottonova's B2C business, the fact that the other insurers are slow, is actually a disadvantage in the B2B business, because they're also slow in buying those B2B services.
Yeah,
I'm actually glad that I'm not at this point not relying on these kinds of cash flows, but over time it can be really interesting.
Yeah, especially when, let's say, a lot of all those health insurers have an enormous IT legacy, because they are. Now I just bought a lot of different parts together, and then you would just say, okay, let's start to put clients one by one on a new platform, just to solve that problem in the future.
Yeah, that's a huge problem for them. And I mean, they're using most of their IT capacity just keeping the system running.
Yeah, that's yeah.
And we have the luxury of still using most of our IT capacity in creating new stuff. And over time, the part of our IT team that is keeping the system running obviously is growing, so I can see where this is going, but I know where it has gone for our competitors. Yeah.
Especially because you see in the fintech world that this kind of separation of parts of the value chain is much more advanced. So if somebody starts a new neobank, then people just go to platform banks and say, can you give me your infrastructure, and they only are focusing on the front end. So you don't see this in InsurTech that much.
Yeah, what we do, and it is more usual in the insurance business anyway, we do an in-between thing where with our white label tariffs, right? So if another insurance doesn't have a health insurance, we provide the white label tariff to them. And we share, via reinsurance deal, and the same is if with comparison portals, they sometimes want specific tariffs, have a clear idea what their customers want, and the larger insurers really don't want to build these tariffs, and so we can build them for them, and so this is like a mixed form, this is not clear B2C, this is not clear B2B, it's like B2B2C, obviously, as they say. It's actually quite attractive for us. It is one of the growth drivers now.
Okay, thanks.
No, and I not know, but I see this happening more and more in InsurTech, as we've seen in FinTech. But Roman, as you've said, there are certain decision-making cycles. There's also existing fiefdoms or kingdoms to be protected, and I think it takes time. I think where you can put the clock on is the type of decision maker, their respective background, their age, how long are they going to work in the industry, and that has a huge impact on their outlook about what's going to happen for, am I in attacker and defender mode also as an executive? Because I think there's so many things, and let's face it, even in B2B, it's not all factual decisions. There's a lot of emotions involved.
Especially in B2B, I would even argue, it's a lot about top executives clicking with each other.
And now moving to a space where it's absolutely data driven and there's no egos and no personalities and no opinions. Let's talk about investments. Let's talk about investors. Congrats to your recent fundraising. To my knowledge, that has been around 40 million, bringing your total funding to 125 million euros. I hope I got those numbers correct. If not, please correct me. Could you elaborate who invested and why, and maybe, you know, what's your elevator pitch? What gets insurers, investors excited, apart from the great CLB, which I've taken note from?
That is certainly one point. Well, let's start with your questions one by one. Who invested? Early Bird invested with their growth fund. So it's, you know, some people are asking me, you know, why did Early Bird invest? They're an early stage investor. And the name is it has originally been the right name for them, but these days they also have a growth fund. So Early Bird invested. And as they are, I think, you know, I like that they're the investor behind N26, and sometimes we call ourselves the N26 of German health insurance. You know, so we think that they're a great addition also to our other investors who also co-invested with that again. And we also Seven Ventures, you know, the ProSieben at Media Group also was part of that 40 million round. And we've been doing many of our television commercials with them, you know, and so that was the group that we got together there. Why did they invest? Yeah, I think part of it is obviously that this is, you know, this is not a business where you're wondering how you will ever make money in the end with all those customers that you get, but it's actually a quite clear-cut way how you make your money in the end, and it's very safe cash flows for a very long time. It's also the very specific situation, you know, with, you know, every 20 years another player is let in. It is also Germany. It is also the specific situation that InsurTech is up and coming, but there are no big InsurTech players yet, right? I mean, so, you know, it's like in the world, you know, it's like 3 that I know in health insurance. You know, there will be more, but it's not like there's like in some industries you have like 50 players starting out. You know, with us, it's very few, a selected field. Eventually we can go international. We don't have to. I think the German market is big enough for us, you know, to grow over the next 10 years. Nevertheless, there's a chance for internationalization, and there's a chance also to go into neighboring fields, you know, and so I think we were at a stage where we had mastered all the hurdles of the beginner, you know, and are now in a field where we can just apply more money and grow faster, and that's what's obviously attracts many investors.
Makes sense. And yeah, okay, it's interesting. Number 26 of health insurance. Yeah, that's that's catchy. If we were to make a role switch, so assume you were, and you would be interested, and you know everything that you even would want to take the job, right? But say you were starting as the CEO of an established health insurance company in Germany, let's say tomorrow, and it's positive and you're excited about it, otherwise you wouldn't take the job. Knowing what you know right now, what would your strategy for the next 5 years look like, and or your first 100 days, whatever you find it? Basically what I'm trying to get at is, you know, where would you try to drive that business, knowing what you know?
Yeah. Knowing what I know, I probably wouldn't be as enthused as you're hinting at, but I would separate the challenges into 2 buckets and have 2 teams working on them. One team would be, you know, what do we have at hand? What are the challenges? How do we solve them? You know, and you know, this is going to bring you another 2-3% every year, and you're still going to run off the cliff, but maybe 5 years later, or you're still going to make, you know, keep your valuation, but it's not going to change anything big. The other team, I would separate the other team, because this team will be a big team, and they will have like enormous funds flowing through their pipelines, you know, and they would never work on anything new, which is pretty much like the people that you alluded to before. The other team, I would probably put in a different building, maybe even in a different country, ideally, and I would say, you build the innovation that is going to get us to the next step. I probably at the end would think about buying a company like Ottonova. It wouldn't have to be Ottonova, obviously, but thinking about getting that second team up to speed faster, because they will never have a chance against the first team, because they will have very little business and very little numbers. And so you would have to think about what could you do, what kind of M&A activity. Could be buying another play in a different industry. So I would have basically two different playing fields. One very conservative playing field, keeping the old business afloat, milking the cow, basically, you know, and the other business basically thinking about the future and separating it. And as you have if you've had that experience, you know, of the people in the milking the cow business, they really don't have the time or the mindset for doing the new thing. And it's understandable, because they will never make the same kind of money in the new business in the beginning, at least, not in their career, in the next 2 years in their career.
And, you know, I would say, I think everyone in this virtual room has done probably 5 years ago, irrespective, would have been excited about certain opportunities that if presented today, they were not that exciting anymore because we moved on, right? And because we also build a certain base. So I think that's natural. I would just like to dig in a little bit, because I wanted to understand or get your opinion on an observation that I've had. I felt absolutely the separation, but what I don't know a single innovation team that is called innovation that is kind of totally separate, that actually works really well. I think it needs to be separated. I think it needs to be, has clear growth targets. So it cannot be this, everyone play around and, you know, they call it R&D, then it's something else, right? It needs to be applied innovation. It needs to work. You need to get customers. So the best version of what I've seen is not set up an innovation department that scouts different things and then tries to bring them back to the business, but something akin to, hey guys, you're in charge of new growth, right? You have all the tools, and you can basically decide, we're going to seed fund you, and you can decide if you want to take certain assets from the company, from headquarters or not. You know, if you can get HR from them and they're really good and you get them below cost, that's fine. Or you go to the market. Same with technology. If you can get headquarters to give you access to the existing customer base, but you need to find the entrepreneurial struggle to find a way to get it done and not be, and if you can get the assets from the headquarters, great, but you need to kind of find your own way. But ultimately you're measured by being a sustainable business yourself. Yeah. Do you agree with that, or do you find it different from what you've had in mind on separating the two?
Yeah, quite frankly, I'm probably not the best to run a large corporation anyway. So, you know, that would have been just my idea. I think it is very hard to do something like Ottonova did in a large corporation. So that's why, you know, that's what we live off, you know, that large corporations prefer to buy a company that has gone through the struggles, you know, and pay a premium for that, and that's part of the premium goes to the VCs, who fund also those companies who don't survive those struggles. So I think just because if you have, I used to work as a consultant in my youth that worked in the pharma business. And then I worked for the chief innovation officer. You know, we did a great project. But in the end, I learned, you know, in the beginning, I said, this man has the best job in the world. You know, I envy him. in the end, after the project, I said, I pity him. This is a terrible job. The shots are called by the heads of sales of the different countries, but certainly not by the chief innovation officer. So that's the trouble so I've seen that from afar. I don't know the real solution. I think you are pointing in the right direction with the entrepreneurial spirit, and that's what I tried to allude to. This little group would have to have basically means to do M&A deals, buy stuff, and that's hard. And the other part of the organization will hate them, because they say they're not bringing in any money, but they're spending a lot, and they get lots of playing money there.
Full offices, red sneakers,
yeah. Drinking beer on Friday afternoon, whatever, So yeah. But I don't have the solution to that. I'm actually. I was saying, I'm in my little valley here of building Ottonova, and then I don't have the oversight anymore, the helicopter view that I used to have when I was a consultant in my youth. Yeah.
When I may add to your separation of the business, and I thought perhaps you're referring to it. I mean, for those people who want to dive into this to understand it much better from a systemic point of view, is the very famous book Innovator's Dilemma.
Yeah,
Christopher Christensen. So I think the common understanding why it doesn't work. You're talking about milking the cow, etc. But it's there are even much more complex, systematic. You can call it failures, or also just embedded in the system itself, and understanding and accepting this two separating truth, because they are truths on its for its own sake, depending on where you are, like what you call milking the cow. I think it's this kind of starting point, and that's something, because you also refer to pharmaceutical industry. What I always find interesting is that the pharmaceutical industry, with the patents and the biotech experience, are much more willing to accept that their business model have a certain fixed duration, and the patents have, let's say, given a clear understanding when the business model is over. In other industries, we don't have patents, although they're already also there. They're also patents, but we don't see them. They're invisible, but we have the same problem, that business models have a certain duration and then it's over.
Yeah.
And in biotech, this is accepted, and it's also accepted that as Novartis and all the others, they have brilliant people. They let them, let's say, experiment in these campuses on biotech startups. They're also allowed to become very rich when they succeed. And the only deal they have is, when you succeed, then we will have the right to sell your stuff or your medicine or something like that. And that's something which in pharmaceuticals works pretty well, but in fintech or insurtech, etc., it's a lot of politics. It's not clear understanding. It's not accepting that there are some guys who have a very small percentage of a chance of building a huge company, because that's also where you're referring to. That's why private equity has to make a factor, a multiple of 10 or 20, etc., just to fund all the other ones who didn't succeed. And I think this understanding is just missing in the whole corporate industry. If it is insurtech or fintech, it doesn't matter.
Yeah, it's a valid point. Yeah.
And they're always too late. So it doesn't matter what it is, if it's N26 or take as an example, in the Netherlands, Adyen, 70 billion market cap. All the banks could have invested in it, but they didn't.
Yeah.
And you see this over and over again.
Yeah, I think the Clayton Christensen's book, The Innovator's Dilemma, describes it very well. Yeah, that's a good point. I should have quoted him. He obviously, you are right, Tom. He influenced my thinking there. Yeah.
So, kind of conscious of time, we're trying to be on time today. I would go through a hot or not session, and basically, Roman, if you could just say hot or not without a big of an explanation, and then people like to pick your brain further. I'm sure they can find you online, and then you can decide whether you'd like to answer or not. So let's kind of do a hot seat session on. I have 9 ideas with me. Okay.
Yep.
One, I believe I know the answer already. Insurance as a service as white label to other insurers.
Very hot.
A switch tariff without another health check in health insurance.
Hot.
Private health insurance without or at significantly lower commission via employers as an employee benefit, but needs to be portable.
Not too complicated.
Eligibility insurance for students, graduates, and young professionals.
Hot.
Offering your concierge and health X program as a service to other health insurers, in brackets, monetizing your assets.
Hot.
Native language versions and advice for native subsegments of our of the country, let's say Turkish or Polish, just to take 2 large national groups.
Hot.
Green health insurance.
Hot.
Offering pet health insurance.
Not.
And what about digital nomads?
Hot.
Great.
Well,
so for anyone, yeah.
Maybe hot. I have to. The digital nomads. There are some people at Ottonova who would say not. But so that's it's a discussion.
Awesome. Thank you. Thank you so much. So just to kind of wrap this up, who are you interested in talking to? Who should reach out? Any last words
Yeah.
you should like?
We're talking to, well, obviously, we're still growing, so we're talking to investors, but probably not something that we yell out on the program, but it's something that we do in a more structured way. What is always interesting also in an unstructured way is to find those partnerships. If there's a non-insurance company that has a large group of customers with a specific risk profile that you can offer a specific insurance to, that is something that's interesting. An insurer who is lacking specific insurances, and doesn't have the license, but could you get them from us? You don't only get the insurance from us, but the record-breaking customer service with it. And even partners in that digital customer acquisition ecosystem, where we're all working together in specific ways. That's always interesting.
Awesome. Roman, thank you so much. I'm sure a few people will reach out to you. Thank you so much for your time and your insights. And from my end, greetings from Hamburg to, I believe, Munich. Is that correct?
Munich, yes.
And greetings to Tom, Zurich. Is that where you're at right now?
Yeah, always.
I wish you all the best. And to our listeners, thanks for listening, and hopefully see you on the circuit at some point face to face. Take care.
Absolutely. Nick, thanks a lot. Tom, great seeing you again.
Thank you.
Bye.